What are the factors? Now, we are saying USD factors. Now, if you see the current market, the entire market move of the past 3 months, right from November Trump election all the way till now, it is actually USD related factor. Everything is related to USD. Domestic or rather local factors have not been the primary driver behind the move. So it's been primarily dollar driven. So we need to understand the dollar market, rather factors related to US economy and how they impact the globe, which I would say is 80 to 90% of the current market driving force. Okay, so as we expect, the first and foremost slide on any topic right now related to markets has to be on Trump tariff, because this is the most, I would say, the market moving factor and also one of the primary contributors to volatility in global markets, right? So I'm sure a lot of you are reading through Trump tariffs and everything, but that's not the intent here. So let's understand where this Trump policy is coming from, right? Even if you go back to 2016 first term of Trump, he always stated that the US has been extremely lenient towards most of its allies and trading partners, and in exchange, the allies are not helping the US in the appropriate areas of concern. Similarly, with China, he always had a problem because he obviously believes that Chinese exporting to US is a significant driver of their economy. And China, basically in terms of intellectual property theft, in terms of so many other areas, they actually try to undermine the US, and therefore you need to be very harsh with them. So this has been the agenda even in the first term. It's not new, right? So now the point is that in the first term, if you look at the way the markets behaved, when the Trump got elected, the US yields rates behaved exactly the way they have behaved now. They sharply rose, right? And dollar also strengthened to some extent. But if you look at the overall presidency, right, actually Trump has not been that bad, was not that bad in terms of the actual tariff implementation on the ground. Yes, there were negotiations with China, a lot of uncertainty was there, but it was not that aggressive, right? Now, with the new Trump 2.0, things are even more aggressive. He started off his presidency in a very belligerent tone, extremely proactive in carrying out the agenda that he promised, right? So what are the points about the agenda that we have to be focused on? One is obviously tariff. Now, tariff is not just about trade. So Trump is not looking at tariffs as a means of getting some trade related benefits. It's not I put a tariff on some country and that country will somehow buckle under the pressure, and so I'll get some trade concessions or maybe currency related devaluation, or rather all those stuff. That's not the intent. Trump is looking at tariff as a more of a geopolitical tool. So it is so with, for example, the latest rounds of tariffs which happened over the last weekend on Canada and Mexico. The reason for tariff is not that Canada is running a huge current account surplus, exporting a lot to the US, and therefore they are earning a lot of money. No, that's not the problem. He wanted border control. Trump wanted border control. Trump wanted the flow of drugs to be stopped. Similarly with Mexico, he wants them to deal with the cartels. So this time, tariffs are it's not just about a trade tool, it's a negotiation tool which he wants to use for everything and anything under the sun to draw some concessions. Even with China, the tariffs that he has right now put 10% additional tariff. Now, even that tariff is not just about the fact that China is doing huge trade surplus with the US and so on. His problem is China is undermining US interests by not allowing US companies set shop there, by not really taking care of the intellectual property. They are stealing the US trade secrets, right? So that is the kind of issues that he has. So tariff is not something which is going to go away anytime soon. Tariff will be there, and it will be a very potent tool in his mind for implementing his overall foreign policy. Right, that is what the slight difference is with respect to this round of tariffs versus the first term. Now the point is, now tariffs, the primary objection or rather concern of markets related to tariffs is that tariffs are extremely inflationary, and they, going by history, very heavy tariffs actually have contributed to a deep recession also in terms of even in US. Because when you import with a very high cost, suddenly the economy, the cost of doing business goes up a lot, and there will be a massive economic slowdown. On the other hand, tariffs feed through prices and therefore are extremely inflationary. So this is the argument, right? Now, therefore, what has happened as a result is that when there's a tariff threat, the primary feed through is through inflation, and hence through therefore higher yields, higher expectations of a rate pause from Fed, no more rate cuts, right? That's the first thing that has happened, right? We'll see the charts later, but I'm just giving you the flavor. Second thing that has happened is because of tariffs, right? One would expect a significant inflation, well, that's anyway expected, and therefore Fed activity. That's the first